Well, Jonathan, like I said, you are one of our homies, and we do have a lot of housing data coming in. We talked about this a little bit last week. Now we have lousy data coming out of Home Depot, and now housing starts. So has the narrative changed for you?
I don't think so. I think what we heard today, as far as housing starts, is a theme that we've seen all along, right? That's been pretty soft. It seems like new home buyers aren't really fishing in the market too much, and are really waiting for their prices to come in. So from that point of view, I think that's been soft, and it's going to continue to be soft. And once again, as we mentioned last week, with the new tax regulations that come into play and what people can write off from their tax returns, start to see that impact now. That's going to affect people when they go look at a house. The real estate taxes they have to pay on that. Can they write it off? Will they write it off? Or they won't be able to write it off now and in the future. That clearly plays into the outlook of that market there. And and Home Depot earnings that came out today, that's putting our pressure on the Dow this morning. We're seeing a lot of red from that, but I think overall that narrative has been the same too. I mean, we've seen in that area there that some of those companies who have struggled in most recently.
It has just secured the narrative, if anything. Now, we also have Jerome Powell testifying. A lot of the financial memes on Instagram and Twitter, they keep pointing to missing Janet Yellen. Like, there was a picture of Lady Gaga and Bradley Cooper at the Oscars playing, and Lady Gaga was Janet Yellen's accommodative policy, and Bradley Cooper was the market. So is Jerome Powell not accommodative?
You know what? I don't know if it's really accommodative. I mean, the time that we were going through, our economy needed that help. It needed those training wheels on it, so to speak. And I think now at this point, I think we can agree that our economy is strong enough to stand on its own. We don't need as much stimulus behind it. We don't need as much help to get us where we got to go. So I think Powell is somewhat being realistic about where we are and what to expect. And I think we need to believe in that and understand that.
Being realistic. All right, so we can believe in him and understand him. Now, in the markets, we are at this precious point of resistance that we keep testing. Could it just be that's like the rut, or are there any like correlations in the market that could be bringing us down as well?
I think it's all correlated and tied together, but if you do look at the levels of where we're at, clearly S&P, we tried to get above 2,800. We were there for a very short period of time, but that looked like from a psychological level that was going to be a resistance level. So we're trading below that now. Might get above that, but I'd like to see a few days above that before I really believe that we're able to sustain that level that's there. And above that, 28.13 would be the next resistance level.
All right, 28.13. Thank you so much, Jonathan, for taking the time, and I'm going to see you in March.
That's it. Thank you. Have a good rest of your February.